All right. Hello, everybody, and welcome to another Pepperstone live stream here over on YouTube. This is actually our last session doing it here on YouTube. So make sure to sign up in the links in the description down below and also wait to find out more about our exciting new updates that we're going to be doing from next week on. But if you are joining us here live, it's great to have you here. And of course, I'm looking forward to going through everything to do with the show today. We're going through, of course, S&P 500, what's going on NASDAQ. We'll go through silver, gold, and everything to do with commodities and FX. And then we'll kind of cap it off because today is CPI day. And this basically means that we have a lot to discuss. Be some pretty large volatility. And as we know, we've found one of the most important points here on the S&P 500. We've got Grace, John, Marius, Aussie Cobber, and many, many others coming in to join us here early. As always, give it a thumbs up if you enjoy. Make sure to put your comments in the live chat and we will answer them throughout. Let's get started. Quick risk disclaimer. We'll see you in just a moment. Okay, so basically we have a very important point here for the S&P 500. As we discussed in the last week when we talked about this, our suspicions were towards the buy the dip on the major markets. And the reason was kind of as oversell, a 65 VIX out of nowhere, what we call a flash crash, often is met by buy demand. And I think it's something that's very important. There's a difference between a degradation of the market and a flash sell. And last week, what we saw was a flash panic, a VIX 65, which is often symptomatic of actually a full on market crash across the board. And that's just not what happened. I mean, in the end, we hit a very key level, 5,100 area for the S&P 500. And now we've managed to rebound coming into the all important CPI number all the way back to the 61.8 fib, a daily 20 moving average, a downward trend line. The previous trend line, you can see how much is linking up here. And of course, one of the most traded zones as well. So very important point here. We're joined by Ty and Abella as well today. How are you going, Ty? Are you looking forward to CPI today? It's going to be pretty big.
Always looking to forward to the news at the moment, Tom. Everything seems to be, really lining up. I do like what you're talking about here as well. There's a lot of things to like about this level, isn't there?
Yeah, so it seemed to be a bit of a magnet this week. Options were also pointing towards the same level, and we were seeing it across quite a few different markets. And we've actually got some excitement here because what happens here, let's say we do end up getting a little bit of a rejection. This is going to be where some people will take profit and they might look towards the sell side post news. But there is also an opportunity that the market continues to ramp up. And if it does do that, let's say it gets through the 5,600 zone, well, yes, okay, we're probably moving towards all-time highs and then some. But it also will mean that pullbacks will want to be met by bull demand. So it becomes one of those areas where now if we start getting dips from that point, they become more clear to a lot of traders. I thought they were pretty clear last week anyway, Ty, based on the flash crash kind of narrative. But this is the interesting point. What happens here? And you'll notice if we scroll in a little bit to a 15-minute chart, there's been a little bit of structure created here where the market's basically been chopping all the way in. The news is coming out 1 hour before the New York market. So that's 8:30 a.m. New York time. So make sure you're aware of that. And there is a chance of this type of thing occurring where the market pushes into this red box, then rejects it. And if that happens, it's often what we say, patience, react, don't predict. So in this case, what we'd be doing is we'd be reacting to the major bit of news showing that it's probably a liquidity grab. And that's regardless of really what the number is. That's not so much of importance here. I probably expect it to come in pretty much right on 0.18, 0.2 here on the CPI. And according to Goldman Sachs, JP Morgan, and many others, their expectations pretty much sit firmly on the 0.18 to 0.2. So if it comes in around there in terms of core Thai or normal CPI, this is all possibilities. So this is one possibility for later on the session due to scalp. Now that we've coiled in a range, if we go one direction, then the opposite, that can be a bit of a liquidity grab. If it just goes off ballistic into the stratosphere of 5,600, that probably means pullback should be met by bull demand, and you'll look for that as a trade maybe past this event. But there's a lot of synergy. We've got the US 500, we've got the NASDAQ, very similar. You'll notice here that downward trend line we had in our previous video live. We're seeing that now getting tapped. We're seeing anchored VWAPs getting hit as well, most traded zone getting hit. You notice it's all there ahead of news. And this is how it always works. It comes to that equilibrium level. What do you think about these levels, Ty? Do you feel like they are, is there a nasty bear here, or do you think it's too early to tell still?
I reckon there could be, Tom. And look, I think the other thing we have to keep in mind is obviously we've got important numbers to come out, but we do believe in seasonality a lot. You hear Tom and I talking about seasonality, and the end of August to September, it can be a little bit dicey. So you've got to be probably factoring in that in your trading as well, that although it looks like it might be ramping up from these levels, it is in an area where it could certainly reverse if the numbers don't agree with what the traders' sentiment is. But also, the fact that we're only a couple of weeks away from September, which we know historically is one of the weakest months of the year, I guess going to all-time highs at this time of year would probably be a little bit unusual, I think, Tom. Not to say that it can't. It could certainly do it if it gets the right data, but I'm sort of erring on the side of it's going to have to convince me a little bit more than just a little bit of a move, I think, because I'm a big believer that September is a little bit soft.
Well, actually, look, it's an interesting one because I agree. Septembers have been always really bad. They're the worst month of the year, usually post Feb, March, which are also quite bad. But this year is election year, which can kind of mess around with it a little bit. Actually, Wayne Whaley's done some data stats on this, Ty, and I guess I'll share them with you guys. Hopefully you like this type of content. If you're interested in data content along with the TA as well, let us know in the chat. We'll start putting those into our new and exciting upcoming series. But the data basically suggests here, Ty, that over the sell-off we've seen right now, if we have a 2-week sell-off in August, that yes, it is possible to get the September sell, but it tends to happen at the back end of September. So there's a real possibility of the back end of September into early October, which is also, that's all the weakness period that we always see. That's actually where it seems to be suggested that there could be that. Now, of course, data is one thing. Technical analysis is the real price action of the market. So what we do know is it's a very important point, and it's come here ahead of the news. And the reason I wanted to bring up the S&P and the NASDAQ, although they're at resistance levels and they could have traps in them, is because I actually want to talk about the Russell type. And the reason is because look at the Russell sitting at 2100 flat right now. This 2102, you notice that it's come down to the most traded zone, hit the 61.8, hit our golden pocket over the last couple of weeks. It's consolidated. And so far, we've had NVIDIA going up, which we expected. We talked about this last week. We've had the S&P 500. We've had the NASDAQ go up. So what we're doing is we're being led at the moment by big tech, and small caps have been left behind, which is pretty normal, isn't it, Ty? They usually come in after. But have a look at this. They're prime trying to break out. How big would a 2102 breach? I know you're a Russell fan. Is this a big deal if this thing actually does close up?
Oh, big deal. Absolutely it is. It's one of the ones that I'm actually watching. I mean, that gives us a sequence of high highs and high lows as well. And I think there's potential there for 80 to 100 points. We've had a lot of trouble, actually, Tom. So it's certainly one I'm going to be watching very, very carefully. I do love the Russell. It is one of my pets, actually. So it's certainly one we'll be keeping a very close eye on. But it's a very 2100 is an extraordinarily important level. And just as importantly, for the fact that if it can't get past there and it does start to sequence lower high and lower lows, the resistance has done its job, which it may well do. That's why it's such an important level.
Yeah. So resistance supply zone, important area, CPI coming. We'll find out whether this can break out. But I think some of the interesting flow trades could be coming into the Russell. So one to watch post CPI. We've also got structure as well with a lower low here type possibility. So maybe the Russell also has the better trade on it. Nice structure, been bouncing for almost an entire session. If it instantly takes the high and then bounces back down, that's kind of a liquidity grab style situation. So it's pointing towards actually a flip, and therefore, false buys have been come in. That's why we always say the close is the key. And if it reverses, that's that reaction to the CPI number. So certainly something that I think a day trader could get involved in terms of thought process, obviously practice your own risk management, etc., guys. But yeah, very interesting point here in the US 2K. I'm keen on that one. It's actually one of my favorites for the week ahead, depending on how this CPI number does play out. Let's move over to our favorites, Ty. Well, my favorite anyway, big gold. You guys know I love gold. I'm like that meme guy. I need a shirt that just says I stack gold or something. So basically, in this case, we have a very decent weekly closure. I always like to go with weeklies on gold because, as you may be aware, it looks like it's in, or it has been in, some form of accumulation pattern. Now, this is what we call a pit. And you might say, what's a pit? Why is he talking about pits? I don't have a pit in my backyard. Well, what it is a pullback in time. So remember, a lot of people think that markets have to go down. Time is the most important thing in markets. If you're trading options, time is the most important. If you're trading CFDs, you might not want to necessarily be in the market for 3, 4, 5 months. So a sideways coiling market, whether it's a distribution or accumulation tie, when these do break out properly, they tend to fly. And at the moment, signs are good for gold to be doing that. Great weekly closures, good rejection wicks. How big will this week be if it gets past 2480? I think it's big.
Yeah, I think it is big, and I think it's setting up, really, isn't it? Like, look, it's attempted to go through here a few times, as we can see by the wicks on the weeklies. But yeah, every time it's done it, it's actually got. I mean, to me, I see a big lightning bolt on a weekly that looks like it's about to bust a level. That's what I see, and I think if it does bust, it's a little bit like Bitcoin in the sense that it could do anything. It's not like we're forecasting, potentially $20 or $30 as a new high. I mean, this could sail on to 2,800, and no one would even blink an eye. It's just what gold does. So I'm watching this level very, very carefully. I like it. I think that even on a daily, you can see it's starting to sequence. The low was a lot higher than the previous low, and the 50 moving average is holding it up beautifully. So now I think this attempt might be the one, Tom. I think it might be the one. So we've got a little bit of work to do. We want to see a close above. Basically, ideally you'd want to see a close above 2490. But if you get a daily close above 2490, I think this one might be off.
Yeah, I feel like if CPI is bad, let's say, or something goes bad for gold, there are also some miniature block zones such as 2425 that could be purchased. A lot of look, the trend is up. So if the trend is up and it's slowly grinding up, you generally want to be with the trend action. Going against it here, even though it might seem like the best thing to do because you're like, wow, it's high, it's got to sell off. When you get into trading for a long time, there's a reason why people say often the trend is your friend. I don't really love that saying, but what I do like is following the price action and following the flows. And so far, we've got central bankers buying gold out of control. We know, of course, Russia and China are stacking it, for the BRICS kind of concept. So there's a lot in its favor. Another one has been silver. Now, silver has been kind of underperforming, but it's looked better in the last couple of sessions. So I've been talking a little bit about this. I know you've also mentioned it, Tyrone. 2650, a level we really enjoyed, and so far trying to make a new high. So again, another one, 28 plus should expose 29-ish on the charts, which is kind of that next resistance level. So far, a series of higher highs and higher lows. It took out the downward sequence on, I believe, anything pretty much under 4 hours. So to me, this is a switch of trend. It's looking promising. And silver, if you actually do the silver gold combo inside of your Pepperstone platform and TradingView attached, then you'll actually notice that it's trading at a very low ratio. So maybe I'll do that for everyone just so you can see it, Ty, and we'll put in a silver gold ratio. If you don't know how, that's how you do it, silver/gold. And you will notice that we are trading back to 22 low, 23 lows, 24 lows. So this means that silver is almost the cheapest it's been when compared to gold for pretty much since the 1990s. So only once was it cheaper during the March crash, which was a bit crazy in 2020. So this is the cheapest silver gold ratio we've seen other than 2020 since the 90s.
That's a very interesting stat, actually.
Yeah. Now, there are, of course, reasons, but at the same time, I don't know. I think that silver is underperforming and it should be performing a little bit better, Ty. And when we go back to ZAG USD, so you put that in XAG and put it in the Pepperstone platform, you'll also notice when you look at the weekly that a little while ago, it managed to clear the $30 an ounce bracket. And this is a very important flow move. So to me, this had big funds behind it. And you'll notice that because look at the volume. The volume started to get really big. So there's clearly something going on here. Okay, someone's selling because there's always a buyer and a seller, but it does look very strong. So we'll see whether the CTAs and everyone else starts to buy them, Ty. But overall the pattern is starting to improve on the downward, on the kind of lower time frames. Now, one of the commodities we discussed before we go into the FX side was oil last week. We liked the idea that there was a bounce here in oil, and this turned out to be one of the better trades. So, of course, we met you Wednesday, and we were talking about it over here. Seems like 2 weeks ago. That's how big last week was. But it was, Wednesday, and we were looking at this being a change of trend towards the upside. We were thinking that we would get to around 77 a barrel to maybe 79 a barrel. We've since surpassed even those numbers. And this was a classic of using both US oil and Brent to do your analysis. But a beautiful little change of trend down here, Ty, and a very strong move once it broke through here to the 79. So congrats. Did anyone in the chat get a oil trade or any of these other kind of positions over the last couple of weeks? Some S&P, some oil, some currencies. Let us know which pairs you were trading. It's always great to see what you guys were liking. But yeah, US oil, loved it. I thought it was really good. For now, I've got like a little pullback zone here around 77. Kind of feel like this is a zone or an area of interest based on previous large trades. So there were quite a lot of large trades coming through here. There are a few, there's a kind of like a more of a 38-2 style pullback. And yeah, again, we saw some large transactions in here as well. So this could be an interesting area post CPI. Oil does struggle with lowering rates, so we've got to be aware of that. But price action is price action. So for me, 77 is the scalpers area for the next 24 hours.
Yeah, and I think keeping your trades relatively tight and scalpy, I think in oil is probably the key here. I don't think you want to be in this trade for very long. I think you want to be, certainly short and sharp, I think, is the way to play.
Braden's got to, I agree. It's short and sharp. Be quick on oil because it will be very susceptible to CPI and more importantly, interest rate changes. And remember, if you look at something like a US 2-year, they are changing day by day by day. There's a lot of movement in yields at the moment, and oil will suffer from that. Braden, Rolf has a question here. Why did silver not catch up to gold in the first place? Well, the reason it didn't is because gold is mostly a precious metal and it's mostly a currency. So you have to think of it as the oldest currency in the book, and therefore it's quite susceptible to rate changes. The thing with silver is it's also more useful. So silver is a commercial metal as well as a precious metal. So when you look at and there's also a lot of it. So it does suffer from economic perceived weakness. And of course, over the last week, we've seen a bit of that. But on top of this, copper has also been falling. So it's a good segue into copper. Look at the sell-off in copper in recent weeks. And that will kind of show you the weakness in silver. And you'll notice they don't track each other perfectly, but that's part of it. Now, could copper have bottomed, Tyrone? Let's have a look at the weekly. So it's rejected a little bit from this previous resistance. So this is what we call role reversal, isn't it? A key area. But what do you think about the smaller timeframes here? When you initially look at this chart, are you liking it a lot, or are you like, ugh?
I'm starting to like it. It's doing, I still think it's got a bit of work to do, actually, but I think it's doing the right things. What I want to see, obviously, is a break of this high and a continuation of the higher, high, higher, low sequences that we're seeing here on the 2-hour chart. It's right on a level that blue line that we've got there, the dotted blue line, roughly where we are right now, is the neckline of that inverse head and shoulders, which is basically what I was going to say. It's amazing sometimes, Tom, when you're drawing things as I'm thinking them. We are actually live, but you are actually drawing it as I'm thinking it. But the proofing concept is what we really love. Yeah, we love the inverse head and shoulders setup here, and a proofing of this pattern will see it reach those highs there that we can see the previous resistance is going to be. So we love patterns that proof, and it's doing all the right things. Yeah, it is definitely giving us higher high, higher lows. I think I'd just like to see it break just a tiny little bit higher, give us a daily close just above that last previous high. And I think we are potentially running up to that. So probably that 420-ish area.
Yeah, I think 415, 420 is very fair for copper. Again, quite susceptible to CPI, as many things are. Question coming in here. I'm looking at that oil chart. And I'm seeing a 30-minute doubling top pattern. So I'm guessing what he's talking about is this little one over here. Technically, that would have completed in terms of just pattern analysis, but you're not wrong. The weakness is here. And we do expect that, this market should pull back. It had such an amazing strength in it. I think it went up like 7-8% very quickly. So to pull back to at minimum 77 is the thought process at this point. And although that's never guaranteed, you're looking. I don't think it's a great buy entry here. That doesn't make that much sense. You'd want to see it usually pull back a bit more. So good question there, and obviously that was from Calvin. Thank you very much, Calvin. Grace also saying silver is 64% an industrial metal. That is correct. So when you're looking around that number, so when you're looking at silver, you've got to remember that side of things. Let's move over to the US dollar. Big drop off here, Ty. Continuing the weakness that we know was in the US dollar. The one thing that's a little annoying is it didn't quite get up to where we would have been more conservatively trying to sell it. I was waiting for a sell here on the dollar, as I know you were as well. We both wanted this trade, but this is a story of we want something, but it doesn't mean you're going to get it. And that's patience in the market. You have to have you have to come from the abundance mindset. So unfortunate. Did you manage to get a scalp or any trades into the dollar?
No, it missed it by just a little bit. Damn. It got very close, but we don't want to. Would you be jumping in for the hell of it either? Like it's got to make sense. This is actually my trade of the week in terms of what it's actually doing. So timing wise, it's pretty good. I think that it's on the verge of a breakdown, and I think that a daily close below the previous low here around that sort of 102, and I think this is destined for parity again. That's my tip on the dollar index, and I think it is so close now. Look, here's the thing, right? It's proofing itself. Every one of those legs is relatively equal, and the next leg down brings it down to probably 150, 180. But even at that point there, you'd be starting to really, really worry about it. The euro is looking very, very strong, obviously. It's broken above the 110 now. And a little bit more weakness on this. I mean, if we see a daily close below 102, which is not very far away from doing, as you can see, I think that there's probably another 100 pips in it pretty quickly, actually.
So 105, what Ty's saying is this move is the same as this move that goes down to here, which should therefore be the same as this move, which proofs into around 100, probably 60, I guess, if you did it properly, because I did a bit wrong there. But yeah, basically there's nothing holding it. Look here on the left-hand side, guys.
There's nothing there.
There is nothing here. This is the final stand. So really you've got a final stand here. We understand what happens here. But from this point, it seems destined to around that 150 that you mentioned. And this also goes with the macro environment. I know most of you, well, some of you might like the macro environment. I'm going to bring it in anyway. We do often want to know why things are happening. Now, as technical analysts or anyone that's trading the market, I'll be real. You don't need to know why something's moving, especially in currencies. That will actually mind boggle you. You're better off just looking at flows. If the market breaks this level, the likelihood of it moving to the next equilibrium of 150 becomes more likely. So then you want to go in, you have a bearish bias, you go into the smaller timeframes, you scalp into that bearish bias. That would be usually the setup here for the dollar. But the macro side of things is we could be seeing rate cuts on the horizon for, of course, in September. And a lot of people are starting to speculate, could be 50 basis points, could be more, could be less. But this is a beginning of a rate cut. Now, if the dollar is expected to have 200 basis points of cuts in it now, Ty, which is ridiculous. I don't think they'll get 200 basis points through by the end of next year. That's going to be a faster rate cut than pretty much the rest of the world is doing. So that will weaken the dollar in comparison to other currencies that are also getting rate cuts. So we saw the Reserve Bank of New Zealand today do a rate cut. We've seen obviously other currencies around the world starting to do rate cuts, but it's all about uniformity. So if we're suddenly saying, okay, yes, the US major is going to do 4 to 8 rate cuts and everyone else is doing 2, then the US dollar will drop more. So you've got to keep that top-down macro perspective in to know when a rate cut comes in, and then often it'll get cut, and then sometimes the dollar will move up. I always say, look at the left-hand side of the screen. I'm going to go full screen here because I want to talk to everyone. This is a huge piece of information. So when you see an announcement in FX, especially, so this is currency trading, you'll often see it do the exact opposite. Has anyone out there ever had that? So you've got, like, let's say an interest rate hike in Australia, yet the Australian dollar goes down. and you're left scratching your head saying, what is going on? Look at the left-hand side. What it will have done moving into that event is it will have already been going ballistically up over the last week or two. This is a huge thing. It happens in stock as well. It happens in oil. A lot of people are saying to me right now, the oil is going up because of the crisis in the world. Yeah, but if you look at the crisis when it started, this is, of course, in the Middle East crisis stuff. Guess what, Ty? Oil was going up ballistically a few weeks before the crisis started, dropped off. So remember, these are just excuses for why markets move. In the real term, it is price action that's already front loading it. So just keep that in mind. And that's my rant. I hope it helps, but I just remember being trapped by this when I first got into investing and trading. This narrative stuff, it sucked. We don't want to be doing that. Blake says
no,
yes.
we've done. No, been there, done that, not doing it again. Yeah, you can certainly get trapped in that. So it's, very good advice.
So you mentioned the euro, Ty, and you like the idea of possibly this. So it's already breaking out. Is this fronting the dollar? What is this up to?
It is a little bit. It is a little bit. 110 was really the equivalent of where the dollar index should have found support. We're sitting at 110.20 now. It's very rare that the euro actually leads the dollar index, but I think in this instance it actually is. So what that's going to do is either spell a very quick correction for the euro USD, or the dollar index is going to be trading below 102 before you know it. And I'm leaning towards that because I think the euro is looking very strong. You can make a very strong case.
It is looking really strong. Yeah. Look at this, guys. We had the rejection already, so that's like the trap rejection. You've got to put your mindset on here. What did this do? Everyone that had stops here, sad face for them because they got hit and then it went off in the opposite direction. There's plenty of previous high zones that are around this area where the market has failed to do it. And now, based on just the last 2 days here, the euro is already front loading the idea of moving towards 111, which is again the next equilibrium. So it looks like it's kind of pushing that dollar weakness concept. And this is, of course, strong for gold, strong for silver as well, and anything that's backed against the dollar, because in many ways we're getting this. And we're also seeing it, Ty, in the Australian US dollar, our currency here in Australia. We spoke about this only a few weeks ago, and we were talking about how it was just getting blasted and it didn't really deserve to be down this low. And then it just went boom. And I think you've liked this towards the long. But yeah, it's been pretty decent, and it's actually got a lot of recovery here. So I don't know if it's going to trade on it now, but this is a very, very, very aggressive move.
Yeah, I think the trade's already kind of happened on the Aussie USD, but and now it's kind of in the middle of no man's land. Actually, you can see here, it's got a lot of price action. If you go just a little bit to the left-hand side, you can see all of that congestion. There was just weeks of it, basically at this level. So it's at a point where, look, it's probably, well, interestingly enough, I mean that graph shows exactly what the chart's trying to tell us as well. That really that's where a lot of the price action actually is. Still a little bit to go, but not much.
Yeah. It's a very critical kind of resistance point around here. All right, a couple of questions coming in here, Ty. We will go to the US dollar Swiss, and then we'll go over to a crypto because, of course, crypto started to improve as well. Let's have a look at US dollar Swiss. Now, there are a few things with the Swiss franc that often do happen, and this chart has been dropping in recent weeks, and it's dropped to where I would usually have expected some buy pressure. It's then come back up to this area, which is probably the key, I think, in terms of for resistance. That's the weekly. So we always like to start on the weekly. Then we see these rejection wicks. So we know if the market is able to close above 87.12, there's a good chance that's going to be quite bullish for the market. And then we have a look at this. So you're going to say something, Ty. Do you want to take it away? I know what you're going to say, but I'll let you do it.
Well, I mean, look, there's a couple of ways that you can look at this. I mean, the US dollar Swiss is a funny one for me because it really, It's difficult to read where the dollar strength is actually coming from. Like, it's not consistent with. So I love the euro because it's a direct comparison to what the dollar index is doing. The Aussie dollar to a lesser extent, but it kind of still goes in the same theme. Where this one can be. It kind of beats. It does its own thing, really, doesn't it? I see on the 2 hour here. Obviously, we've got a 2050 moving average cross. It's, I don't know. Yeah, I don't know. It's not one of my favorites.
I have an opinion on it. So there are a few things that you can look at. There is a very small possibility that we have a head and shoulders here towards the short side. Now we've got to remember we came off a very nice buy level. So this was clearly capitulating. It then came up to an important resistance. I think a lot of people will be looking at this from a short perspective. Now it will also proof. So what we mean by proofing is if you take this distance here, so you take the head to the kind of neckline, and then you extrapolate that out. See how it proofs down to this kind of support level? So if you are bearish, of course, you've got your pretty clear area that you would be looking at. Now, it'd be interesting to know what your opinion is, William, who's asked this question in the chat, because I'm interested to see which side you're on. And like most of the time, you can make a case for both sides. I wouldn't actually make any case for the bull end right now, but what I do know is this is the clear pattern that everyone's seen. Now, that doesn't mean it's the best trade. It is against the current higher highs and higher lows on all the smaller time frames. So you're actually counter trending a pattern on the smaller time frames against the smaller time frame trend. You are in the overall longer term trend. You have seen a rejection wick, and you also know that this is set up like a short. So the short has the capability of this, but if this market actually goes up and breaches 87, you've got to remember a lot of shorts will be trapped here due to the nature of the shooting star on the daily, then the secondary rejection candle, the nature of the pattern. So sometimes I think patience is the best course of action. I'm not sure if I would do this. It's so obvious. It almost looks scary to me.
Yeah.
But yeah, that is the one where I would be like, oh, it's maybe too obvious there.
It's kind of somewhere between the 38
Currently
and 50 fib two of the last move on the daily. So, it is at a resistance point, really. I mean,
It
too
is at
much
the resistance, yeah.
Yeah, too much is pointing towards the fact that it'll just sell off, and I think that's what worries me. I guess
Yeah, it's very
it's almost
clear.
too much. Yeah, there's almost too much.
Sometimes when something looks so textbook, it can be a bit worrying. But look,
Yeah.
you're in a short, he said, so he's probably already in some form of TP, take profit. Not take profit, sorry. He's in a profit position because it is going short. There's no real worry right now. You're concerned about CPI. That's valid. I mean, CPI, will a stop loss above here be safe? Maybe not. Will one above here be safe? Probably not. Would one above here be safe? Likely, yes. But of course, if it does reverse to the upside, CPI is one of those data points that can move currencies quite a lot. It really depends whether you know your stats of your system. So if you've done your system, and a good psychological point, by the way, is 40 reps. So whenever you're doing a trade system, you really should be giving yourself 40 of the same trade. Once you know 40 trades, hopefully you're winning around 55 towards 80% of your trades, usually more the kind of 60 to 70 bracket. If you are winning that many and you've got your 40 reps in, then you'll know your stats. And then you can just say, well, it's just the same thing I always take. News doesn't matter, because what you'll find is that news will more often help your trend trade than not help your trend trade. So remember, the news is there to scare us. It's to fear monger us, whether it's greed or fear. We usually feel fear into news because we're scared of losing our stop losses. In this case, can't tell you what to do because I don't know your system at all. But the thing is, you need those reps so you can build that statistical. This is a business. We must build it like a business. So once you start to approach technical analysis and trading like that, and you start to say, I need 40 reps, I need to know my stats, then it'll become more clear that you'll just keep doing the same thing. And it doesn't matter about news. It's irrelevant because remember, you control your risk, which is very important. Good question. Cool chart. 2 ways to play it. I always like the trappy way. So for me, I'd just be kind of just chilling, but I can totally see why you'd be a short. Head and shoulders, break it downward. Obviously, it proves all these types of things. Plus Ty said fib, plus previous resistance. A lot of things around this level. Maybe it's almost too textbook, but we'll find out. Okay, so then we have crypto Ty. Now, been a very nice little recovery here on Bitcoin. It's pushing back to the 61.8 fib. And I hope that actually helped a few people in the chat as well. We've got quite a few people joining us. Make sure to give it a thumbs up if you enjoy the content here, guys. And also, put your chat comments in as well if you like those kind of little deep dives into somebody else's kind of trade, so we can dissect it as well together. And hopefully you learn a couple of little things. If you like that, again, something where we're always working with you to figure out what you want to see more of. We know what we like to do, but at the same time, we like to add a little bit of live analysis. We've been doing this so long. We've seen so many pairs. Great thing is Tyrone and I are fluent in the indices, in the commodities, the currencies, and the cryptos. So we basically can go through pretty much any chart and then break it down, because we're using a simplified concept of breaking it from the high time frame all the way to the low. In this case, I've done a bit of Bitcoin work, and on the Monday session, Bitcoin was actually setting up for a buy tie. And what it did, it almost snapped the low. So I actually was looking at this, and my opinion was bullish around here. Now, you'll notice what happened was the market got really scary and it came down, almost hit the low. Luckily, I was asleep. But overall, it managed to hold this level, which is the classic resistance becomes support area. And then it bounced off this area a few times, creating a base structure. And it's managed to get back up here to the res. So for Bitcoin, breaking through the 63,000 barrier should open up around 68K. And this is going to be a big deal, because if we can get to a 68K number, let's just have a look at this on a weekly so you get a bit of an idea. 68K plus. Now, 68K is definitely the TP target for a lot of bulls. If we get through this area, that's certainly a very big zone. But if we get through 68 and we close a nice weekly, I'm thinking this has finally done its coil. That looks very trappy to me, what we saw last week, Ty. I think a lot of people got liquidated. Unfortunately, that may be someone that's watching this in replay or live right now. Classic liquidation technique, and it's happening on a lot of stock as well. So if CPI comes in favorably for the markets and the markets keep pushing up, I could see Bitcoin really starting to do some nice stuff into September.
Yeah, it's trying hard, isn't it? It's a little bit like it kind of wants it, and I think you're right. I mean, a break. I think a big deal is a break above 62.5 for me. If we get a daily break above 62.5 now, I think it opens itself straight up to the 64.5. So it's a really, really important level. The moving averages will be out of the way. You know, I think that you're right. This might be the one. It seems to be launching.
Still doing pretty well. Yeah, doing a little bit.
Still got to do it, but it's doing all the right things.
Well, have a look at Ethereum here. Pre-CPI numbers. Again, CPI could ruin all of this, but pre-CPI, this thing's trying to break up. So again, the crypto market is starting to move. And this break is significant because that pushes a 2,900, which is, there's nothing to stop it until 2,900. So again, could be $150 on Ethereum relatively quickly should the CPI be favorable towards the markets themselves. We've got a question coming in here. Can we have a look at the Nikkei? Yeah, we can have a look at Japanese market. So Japan 225. So basically, this was the one that everyone was talking about last week, the whole big margining kind of thing, carry trade, blah, blah, blah. Yeah, it got crushed and it really did bounce. And of course, the Japanese central bank came out and said, don't worry, we're not going to do any more rate hikes, guys. We didn't mean it. We've done 1 or 2 rate hikes. We thought we could get away with it. Now we're a bit scared. We won't do anything to stop the market. This just shows you the stupid situation we're in. Central banks push 1 little basis point hike, and then the market gives them a massive freak out. And then all of a sudden they've got to pull back on it. It just shows you how much of a problem Japan really is. But it's been a problem for a long time. I think I can almost never remember past a point where Japanese market hasn't seemed like it was going to blow up every second day to me.
Yeah, it's wild. It's absolutely wild. And they're supposed to be independent. Let's not forget. Like it's supposed to be independent.
Anyone believe that in the chat?
Yeah. God,
yeah. So the Japanese market has recovered. What you want to be looking at here is a few things. You want your fib overall, which is of course 37.8, which is the major fib extension, and then the one that it's at the moment is right around the previous swing. Now, 20 moving average is here. Tyron's going to say that's a bit of a dynamic resistance point. It certainly is. Small time frames at the moment, just grinding higher. I'm not going to try to short this personally, this market. I would, if I was looking for a short, I would wait until we actually get into a short zone, which would be up in here. And that's about that 38,000. So I feel like it's just kind of grinding higher. And the same thing's happening on the US dollar yen as well. They're just kind of recovering and climbing that little wall. It's pretty normal for them to usually have a pullback, isn't it, Ty, in these climb ups? But again, I don't know what it's, I don't think there's something replicable for me here. Maybe a breach of 148 on the yen could push 150, but would I do it? No.
Yeah, I don't know. I'm a bit scared of the US dollar yen at the moment, to be honest. Well, I'm not scared of it. I just don't want to trade it. I mean, we've already had
taking unnecessary risk.
Yeah, the party was on the way down, really.
Yeah,
and that party ended quite a while ago. So I think that you are taking, I think you're right. It's probably the best way to say it. I mean, you are taking a lot of unnecessary risk on something that is extraordinarily volatile and can go in either direction very, very quickly. Like that's not that's not a replicable trade. That's not what TA is all about. Not the TA that we do, certainly. So I think it's certainly a watch and see on this one.
Absolutely. We've got Caleb coming in here from Africa, Kenya. Welcome, Caleb. Thank you very much for joining. He says, can we check out gold? Am I a little late today? Yes, we have checked out gold. So if you actually pop back into this recording, watch back maybe about 20 minutes ago, we went over gold. But generally, it looks pretty strong. We're looking for a big weekly close here to get that real momentum through it, though. CPI today, remember, 8:30 a.m. New York time. So make sure to get your clocks and everything set for that. And the expectation is that that could move markets upwards of 1% to maybe even 2% each way if the number's really out from what they believe it should be. Gray says New Zealand US dollar is sell on rallies. Can you please have a look? Sure can. So again, the big news for the New Zealand dollar was that they did a rate cut. So they did a rate cut. And in this case, it might have been a little bit against what the market thought. So the market was rallying in. We get a rate cut. It drops. Well, that makes a lot of sense. We rate cut. Of course, New Zealand dollar becomes less desired because it's slightly less money when it comes to the global markets. And that's why it's dropping off. And it also makes sense as well because the market was actually coming up into this event. And if we go to the daily as well, you'll see here we came to a very important point. Now, this is what I call a break of structure zone supply. So this is a very good hit pre the announcement. Not sure if it's that easy to trade into, but where it's come back to is also where I would expect buyers to be. So around that 0.6 ratio. Let's have a look at the small timeframes, Ty. Have we got any structure creation here? Your thoughts, initial fall off, too much or just right? Is this the area you'd be looking for a buy? How would
I think this is the area probably I'd be looking for a buy. But it needs to do a little bit more work for mine. I think I'd want to see a reasonable sequence of higher highs and higher lows on a meaningful time frame. Probably, I'd like to see it on probably at the very, very least a 30-minute to 1 hour chart just to give us some momentum moving up. And I think if we get that, we can start to see a bit of a resurgence from it.
I think 60 is a big number. It's a 10 cent point. You might say, how can it go up off a rate cut? Well, remember, a lot of central banks are probably going to be doing rate cuts. So at all things equal, that'll catch up to itself. And this is a very good support. So I'm kind of looking for this type of setup here where maybe the market structures, makes a new low, starts to rally. Again, that's going to show on higher time frames, not just 10 minutes, 30 minutes, 1 hour, as Tyrone mentioned. And then we might start to see a bounce. So interesting pair here, and certainly one that you could be looking at. Now, Ty, I'm going to take us over to HSI because I want to talk this dreaded Hang Seng market. And you might say, why do I want to talk about this one? Well, we did just see Tencent come out with its earnings. Now, I'm not sure how it's trading pre-market. Maybe someone can let me know in the chat. But I did see that they actually had what looks like an okay kind of earnings. Let me see here. Probably partially blind here when I'm reading these news announcements. Where's my... I don't even know where my announcement is here. But I did see that they had their earnings are out, so it must be okay, I believe. Now, 20 moving average, Ty. This is why I wanted to bring this up. You'll notice here, everyone, 20 moving average is holding it down. I've got 17.45 as the last high, and I've got 20 moving average I'm looking for this market to breach this area. I think if it can do that, it's putting in the good work towards saying, you know what, maybe we overly aggressively sold off this market. Times are changing. Again, price action and the narrative are different. You might say, but China has had so many problems. There's issues everywhere. No doubt the market is down like 70%, but it's down 70% for a reason. So this could be a great recovery. What do you think about 17,450?
Yeah, I want to see that break. And I think I agree. If we get a break above there, it's done all the things that we'd be looking at, regardless of if it was the Hang Seng or the Euro USD. We're looking at price action and structure. And if it does that and breaks that level, I think that it's a very, very strong possibility that, we're going to be back in the 18,000s in a heartbeat. It's trying hard. It's trying hard. That 20 moving average is a big deal, though. I love them. But trading above it would be a big deal. But getting above that 17,500, it's going to definitely spark my interest.
Yes. So this would be, I think, pretty exciting if we were able to do that. And certainly the market I'm looking at. Now, the reason I mentioned Tencent is because you look at the code, and I'll just pop in this code here so you can have a look at it. You'll notice that it's trying to breach through this 377. And we'll find out how it ends up trading after this news announcement, which is, of course, a positive earnings. And we'll see the next session. But yeah, it's really trying to get that. And this is a totally different market to the Hang Seng in terms of its overall strength. The most important stock, arguably, on the market. So watching the Hang Seng, watching that level, like to see it break. All right, well, it's that time of the show, guys, where we ask you just if you have another one or two positions that you'd like us to look at. We've got an exciting announcement. Next week, we do have a sign up to be done if you're interested in following along with this. In fact, what I'll do, if it'll let me, and I'm pretty sure it won't. So let me just see if I can do this. 1 second, guys. Okay. So if you take, I'm not sure if that link came through, but if you look at that link, you'll be able to sign up for our new webinar series that we're doing. And that will be awesome to see you there. And I'll post that over on one of our socials as well. So you guys can see it there if you follow at FX Evolution. This is for Pepperstone, and we'll be doing a new series for them at popular demand, Ty, which is basically a live education series like this, but in a kind of environment where you guys will be able to ask a lot of questions. We'll go through things. And of course, we'll bring more of an educational concept to it as well, where each session we're going to want to teach you something new that you probably haven't thought about in markets. We already do that a little bit, but this one will be really geared into those smart money concepts. And of course, trap concepts, liquidity concepts, all of these things we'll bring in on the smaller time frame. So if you're a scalper, a day trader, swing trader, or even investor, I'm pretty sure there's going to be something there for you. Here we've got a question, I think last one of the day from Mitch says, what about the Euro odd idea as we all miss the dollar index Euro trade? Well, I'm not saying, I don't know if it's over the dollar index Euro. I think that's the point with Ty saying it before. It still looks pretty good. But Euro odd, so what you're betting on here is the Euro is stronger than the Australian dollar. We've seen some very strong Australian dollar, of course, in recent times. It's at the right area, but the problem is, Ty, is this enough? I mean, we've got role reversal. Let's go 2-hour chart here. Well, we do. We have what I would usually look for. So we've got a little high here. Probably wait for a closure above this high. And then there's a fair base here, I think, towards seeing this level hold. Basically a stop loss hold here. And markets to try to rebound. Some issues, 167 and probably around 168, I would think. Ty, do you like this enough? You've got this, but do you like it enough? No.
It's doing the right things, but I'm not excited by it because to me, both of them look a little bit too strong. And if both of them are strong, it's not going to be a very strong move in this pair against each other. Both the Aussie USD and the Euro USD they look very, very strong. I think it could be a little bit choppy. It's doing the right things for a potential long, but I think it might be a little bit choppy. A bit too choppy to actually get a good trade out of, I think.
All right. Well, there we have it. Thank you very much for your questions. Thank you for joining us and spending your time with us today. We always appreciate you guys coming out. Drop a like on the YouTube video if you enjoy it as well, so you can let Pepperstone know that you like these sessions. And from both of us here and from Pepperstone, we'd like to say thank you very much. Ty, any words of wisdom to end us with this week, or?
No,
Pretty
just
much
be
watch
just
the
be
CPI.
mindful of the CPI number. Yeah, just be careful of that because I mean it is going to be a market mover potentially, especially if depending regardless of what it does, it'll probably move the markets. Because I think the markets at a level that we talked about today, where they are wanting to do something, and something more than likely will happen. So just trade very carefully around that area because you don't want to get caught out on the wrong side of a bad or even good number, depending on whether you're going long or short.
Excellent. All right. Thank you very much, guys. We'll leave you with the outro. We'll see you next week in the
Thanks,
new
everyone.
sessions. Yeah. See you for now. Bye.